Got some new developments regarding Twitter. According to Reuters, Elon Musk is now in talks with some large investment firms and high net worth individuals about taking on more financing for his $44 billion acquisition of the company and tying up less of his wealth in the deal. The new financing could reduce the $21 billion cash contribution he's committed, as well as the margin loan he secured against his Tesla shares. Jim talked a bit about, and we'll hear the sound in a moment, at the Met Gala last night about his hopes for Twitter becoming less of a niche product and something that maybe all Americans can participate in.
I agree with that. I also really like the idea that this might cause Tesla stock to not go down every day. I mean, I think that the younger people and some of them, people who are of means, look at Tesla the way I used to look at Apple, which is that if Apple falls off, you got to be careful. Watch how when Tesla firms, as it did yesterday, it takes up the whole entire market. Now, is the entire market a trend follower to Musk? I think Musk is the most important figure in finance today, and he's trying to make money. And I think he's got great ideas for Twitter from what I've heard. And I've done work on this. Not with him. I do not have that relationship. But with other people who have done work, he's got big plans. The plans to me make a lot of sense. Right now, I think Twitter is atavistic. It's the same way it was. They have great technology. They haven't been able to put it in place. And I think that Musk can do it. David, you know that Elon Musk does not approach autos the way car companies do. He doesn't approach solar the way solar companies do. He has new insights.
No, he does. He doesn't approach space the way NASA did. I do want to clarify something in terms of this because we're quoting these reports. I mean, what I will tell you is I tend to use the word financing to mean money you need to pay back. What Musk is looking for, and I've heard this from a number of people, is to syndicate his equity. Right? He's committed $21.5 billion, or guaranteed that he will provide $21.5 billion in cash. And there's $13 billion that's coming from banks to finance it. Sort of a traditional way you'd finance an LBO that will be paid back from the cash flow of Twitter itself. There's $10.5 billion, I think it was, of margin loan. And that will be based on Tesla shares. But it's the $21.5 billion that he is out now trying to raise to lower his equity commitment. How much or how successful he is in that is unclear. I know he's approached, even a couple of weeks ago when this was very early, it approached a number of large private equity firms, for example. No real interest there, from my understanding. But that doesn't mean he's going to find a lot of high net worth individuals and or some sovereign funds or others who would be willing to write some big checks here to take down that $21.5 billion number for him. Is that seen as a positive? Maybe in some way, because it'll be seen, likelihood of deal closed in some way. But you could also argue, Jim, that, he's the dog that caught the bus and now he's got to figure out a way to make it all work and does want to reduce his overall equity exposure. We'll see how successful he is in that, but that's the effort that's going on right now. I don't call that financing. I call that the equity check. So a bit different in terms of what is being reported there. We talked about this yesterday as well.
Well, David, I think that one of the things that we can agree to is that when the board considered what he presented in front of them versus their own management team, the board felt that Musk had better plans. From what I'm told, Musk is going to do a top-bottom way to be able to get more people to come in. And, David, I think that this is an undervalued asset based on the fact that it has not grown. And the margins have not grown.
Well, then he's going to be successful in finding people to want to participate on the equity side because there's going to be an increase in that equity at some point if he does successfully, as you say, is possible, re-engineer the company so that it becomes more profitable. And then, of course, at some point, you assume he'll take it back to the public markets, especially if you got a lot of other equity investors there who are going to be looking for an exit. It's going to be fascinating to watch. Again, on the regulatory front, some people may be concerned. It's completely unclear to me what, in any case, can be made to stop this deal on an antitrust basis. There doesn't appear to be anything on that. And then, there'll continue to be some reporting, it would seem, on sort of how he puts the whole thing together. But again, it's the equity check itself. And then, Jim, we'll see. Twitter is a private company. It should be fascinating to watch Musk.
Well, those of us who have tried to use it in business
solar,
to be able to do direct response,
Tesla.
David,
never ends.
It just doesn't work. You can't use it to be able to, like the way you would generate with Alphabet. You write a check to Alphabet if you're a small business for $10,000, you're going to get $15,000 back. You write a check to these guys for $10,000, they'll say, take the $10,000 back. We can't do anything with it. Yep. There. Okay? That's Twitter now versus Google.